All right, let's talk about one of the simplest ways to own your home, free and clear, years faster than you ever thought possible. And no, it doesn't involve some risky scheme or a huge inheritance. It's just a small shift in how you make your payments. But to really get why this works so well, you first have to understand the kind of painful truth behind a normal mortgage payment.
Okay, take a look at this. For a pretty typical $400,000 loan, your very first payment is a real eye-opener. You write that check for over $2,500, but a massive chunk of that, we're talking almost $2,200, is just pure interest going straight to the bank. Only about $360 actually chips away at what you owe. You're basically on a treadmill, running hard just to pay for the loan itself. But what if there was a way to flip that script?
Well, there is, and it's all about a simple calendar trick. This isn't some fancy, complicated financial product your bank tries to sell you. It's just a small adjustment to your payment schedule that uses the way the calendar is set up to your massive advantage.
Here's the breakdown. A standard mortgage is easy, right? One payment a month, 12 times a year. Simple. Now, the biweekly plan just changes one little thing. Instead of one full payment, you make a half payment every 2 weeks. Since there are 52 weeks in a year, that means you end up making 26 of these half payments. Now, you might be thinking, wait, isn't that the same amount of money? Not quite.
And this is where the magic happens. See, those 26 half payments don't add up to 12 full payments. They add up to 13. Just because of how the weeks fall in a year, you naturally sneak in one extra full mortgage payment. That single extra payment is the secret weapon here. It's the engine that powers this whole strategy. And believe me, its long-term impact is absolutely huge.
So what can one extra payment a year really do? I mean, it sounds small, right? Let's go back to our $400,000 loan and see what this actually looks like in the real world. The results are, frankly, pretty staggering.
Look at this. With the standard plan, you're on the hook for the full 30 years, and you end up paying over $500,000 just in interest. It's wild. But switch to that accelerated biweekly plan, and suddenly you're paying off your house in just over 25 years. And the interest? It drops by over $100,000. That's the power of chipping away at your principal loan balance just a little bit faster.
Let that number sink in for a second. Over $100,000. That's money that stays in your pocket, not the bank's. This isn't some gamble on the stock market. It's a guaranteed return you give yourself just by paying off your own debt a bit smarter. That's a college fund. That's a retirement boost. That's incredible peace of mind.
And it's not just about the money, it's about your time. It's about your life. You get nearly 5 years of your life back where you don't have a mortgage payment hanging over you. 5 years of having thousands of extra dollars every single month to do whatever you want with. This strategy saves you a ton of both. Okay, so you're probably thinking, this sounds amazing, where do I sign up? But hold on, because how you do this is absolutely crucial. You see, there are formal programs that lenders offer, and then there's the do-it-yourself way. And you'll see in a second why the official route is often a trap you really want to avoid. And here's the trap, hidden right in the fine print. Many of these paid programs will happily take your half payment every 2 weeks, but instead of putting it towards your loan right away, they just let it sit in a suspense account that earns no interest. They just hold on to your cash until they have a full month's worth, so you're not getting the interest-saving benefit. And to make it even worse, they often charge you a setup fee for this service. No, thank you.
So when you put the options side by side, it's a no-brainer. The formal programs can cost you money, they're not flexible, and your money might just be sitting there doing nothing. The DIY method, on the other hand, costs nothing. Zero. It's totally flexible. The only risk is that you have to remember to do it yourself. Which brings us to the smartest way to do this, the 1/12 extra DIY strategy. And it's so simple. First, just take your monthly mortgage payment and divide it by 12. Second, add that smaller amount to your regular payment each month. And third, now this part is absolutely critical. Make sure you tell your lender that the extra money must go directly to additional principal. That's it. You get the exact same result as a biweekly plan with 0 fees, and you're in total control. Now, as powerful as this strategy is, it isn't the right move for absolutely everyone at every point in their life. Before you start throwing extra cash at your mortgage, it is super important to do a quick reality check and make sure your financial house is in order first. So here's a quick checklist for you. Before you do this, ask yourself,
Do I have a solid 3 to 6 month emergency fund? Have I paid off my high-interest credit cards? Because let's be real, paying off a 20% credit card is a much better return. Am I getting my full employer match on my 401k? You never want to leave that free money on the table. And last, just do a quick check to make sure your loan doesn't have some weird penalty for paying it off early. If you can check all those boxes, you're in a fantastic spot to get started.
So at the end of the day, with a simple, disciplined DIY approach, a debt-free home is so much closer than you think. Which really just leaves one final exciting question. Once you have all that freedom, what would you do with the extra time and money?